Maynilad is trading today at 15.86 pesos per share. But the real question for investors is not just the stock price, it's whether this newly listed water utility can deliver stable dividends, hold up against economic turbulence, and outperform its peers over the long term. In this video, we dig deep into everything you need to know about Maynilad. Performance since IPO, dividend potential for 2026, how it stacks up against Manila Water and Meralco, and whether it can be a cornerstone dividend stock even if the Philippine economy sputters. And yes, at the end, I'll reveal a very important caveat that could redefine how you view Maynilad going forward, so stay tuned. Maynilad officially listed on the Philippine Stock Exchange under ticker MNLD on November 7, 2025 after raising 34.3 billion pesos in one of the biggest IPOs in recent memory. The IPO price was set at 15 pesos per share. As of today, the share price is 15.86, modest upside so far. Since listing, Maynilad has already delivered. In Q3 2025, revenues rose 9.5% to 27.7 billion pesos, helped largely by a tariff increase and a rise in environmental charges. Its core net income for the period rose 18.1% year-on-year to 11.4 billion pesos. Even as billed volume dipped slightly due to some large commercial account closures. The company also improved its non-revenue water NRW ratio down from 39.3% last year to 32.8%. This translates to significant water supply gains and operational efficiency improvements. Given these results, the company appears operationally stable even in a volatile market. Its mission-critical water and wastewater services in Metro Manila's West Zone and parts of Cavite give it a natural defensive edge. Now, let's talk about dividend potential, specifically 2026. According to a recent analysis of its IPO and early cash flow, some market watchers estimate that Maynilad's dividend yield could hit 7% or more once initial heavy capex and rollout costs taper down. That's an attractive yield, especially in a low interest rate environment. If we assume a 7% yield on today's 15.86 price, that's roughly 1.11 pesos per share annually in dividend. If you own 10,000 shares, that's 11,100 pesos yearly. Not bad at all for a utility stock and competitive with many REITs and blue chips. How does this compare to peers, namely Manila Water, MWC, and Meralco? MERs. Manila Water has been less volatile in its share price but has a lower yield profile, partly due to its equity structure and different concession agreement terms. Meralco, a power utility, remains a stable dividend payer, but its business is subject to energy price cycles, regulatory pressures, and higher funding costs. Maynilad, as a water utility, is arguably more defensive because water demand is resilient regardless of economic cycles. Given the early data and yield potential, Maynilad could be a top-tier dividend stock, especially for investors who value steady income plus low volatility plus essential services. Now, is it safe, especially if the Philippine economy weakens further? There are several factors working in its favor. Water is essential. Demand doesn't go away just because the economy slows. The company's capex program, expanding wastewater coverage, improving infrastructure, reinforces service stability and long-term demand. Institutional support, major global investors including the International Finance Corporation, IFC, and Asian Development Bank, ADB, anchored the IPO, signaling international confidence in governance, sustainability, and long-term viability. Of course, no company is immune to risks, regulatory changes, tariff disputes, environmental impacts, or prolonged economic contraction could pressure revenue growth or capex funding. Let's walk through the performance since IPO. In less than a month, the market cap has risen from 113.05 billion pesos to 119.69 billion, a charter 5.9% increase. That reflects modest investor optimism, but also the typical stabilization after listing. The P/E, as of recent quote Sacker, stands at roughly 5.8, which is below many utilities, indicating a value hold status. Now, a few additional important items investors should know. Maynilad's concession agreement allows a regulated 12% nominal return on approved capex, and the company's unrecovered investments are recognized and built into its regulatory return mechanism, creating a built-in cash flow floor. The IPO proceeds are earmarked for expansion of wastewater treatment, expansion of water supply, infrastructure upgrades, projects that support both long-term growth and sustainability. Non-revenue water improvement and leak repair initiatives are already showing results, which could lead to improved margins and better cash flow over time. But here's the very important piece of information I promised earlier and why you must stay until the end of this video. Maynilad's dividend payout in 2026 could be tied directly to the pace of its wastewater expansion and tariff rebasing cycles, which means that if the company executes well, the yield could spike above 7% and grow. But if there's a delay, investors may need to brace for lower payouts or longer wait times. In other words, this is not a set and forget dividend. It's a watch the infrastructure unfolding dividend. If you follow the cash flow, regulatory filings, and capex reports closely, you could see outsized returns. If not, you may just ride stable but modest income. Final verdict. Maynilad is one of the most promising newly listed utilities in the Philippines. For income-focused investors, it offers a rare combination: essential service demand, water plus wastewater; defensive characteristics, less sensitivity to economic cycles; institutional backing and strong governance; attractive potential dividend yield 7% or more; real growth catalysts via capex and infrastructure build-out. If you invest with patience and a long-term perspective, Maynilad can indeed become a core dividend stock, possibly outperforming many traditional dividend plays. That said, success depends on execution, regulatory stability, and macroeconomic conditions. Settings. Use appropriate media. Add karaoke-style subtitle. Use any voice one. User's voice for the narrator. Don't use iStock.